Hi, today we're talking to Gerlach Jacobs of ING, and we're going to be discussing issues that are affecting the transaction bank. So, I mean, transaction banking has been one of the few sort of bright spots in the international banking world over the past few years. It's been relatively stable. However, recently it's been going through a lot of change. There's new regulations to worry about, there's liquidity demands, and also more demands from corporate customers. So how is ING dealing with this recent tremendous change in the transaction banking world?
Okay, let me first comment on your conclusion that transaction service environments within banks have been faring relatively well over the past few years. That's actually picked up by analysts who value transaction service environments, strong transaction service environments within banks more and more. That's actually one of the reasons why ING has decided to make transaction services one of their pillars in the commercial banking strategy going forward in Europe. So that's a very important conclusion, I would say. All the other elements in your question, let me address them one by one. You firstly talked about the impending regulations. Well, it's very clear that the regulations are getting tougher and tougher in the financial industry, and obviously that has an impact on transaction services as well. Where I look at transaction services, the impact is most felt on the operations side. A common denominator of the transaction services products is that they are operationally very intensive products, and therefore it's very important also for ING to make sure that your processes, your IT systems, your operations are as streamlined as possible to reduce the operational risk, because that's something that's being closely watched by the regulators. Your second comment on the liquidity concerns is also an important one. In fact, since the Lehman collapse, we have seen very volatile markets. We have seen very volatile funding markets, wholesale funding. Before Lehman, all institutions always assumed that you could fund yourself at LIBOR. That has changed dramatically, and it's heating up again very recently, given the European debt crisis and the sovereign debt crisis. Within transaction services, at the heart of most transaction service organizations is payments and cash management, which is responsible for a big chunk of the funding mix of a financial institution. So you see much more attention being paid by financial institutions on payments and cash management because they are an important part of the funding mix. And that's the same within ING, where we put a lot of emphasis on payments and cash management. Then the last comment you made related to customer demand. Here I think it's fairly simple. What do customers want? Customers want, especially in the flow products, which are not the most complicated products, they want reliable products, they want reliable distribution channels. That's very important, and they also want a reliable information providing to our customers. That's why even in these difficult economic times, ING has decided to invest in transaction services, to invest in our operations, in our systems, and in our processes, to make the delivery to clients as good, as strong, and as easy as possible. That's the heart of the transaction service environment. Another important demand that clients have is in-depth knowledge on the ground, and especially within Europe, both Western Europe and Central and Eastern Europe. ING is basically based in all those locations, providing in-depth knowledge on our local markets, also very important for our customers.
So it's sort of, streamlining the back office underpins attacking all of that change, the regulations and customer demand. And,
absolutely.
Yeah.
Absolutely. Yeah.
So you mentioned a bit about, the Lehman Brothers and the demands on liquidity. There's a lot of anxiety about what Basel III will bring to the industry. What role does the supply chain have in terms of what we can expect from Basel III?
Well, Basel III, needless to say, has a big impact on the way that financial institutions, including ING, are looking at their various products. I think one conclusion we all can make very quickly is that the lending product is going to be more expensive because it's receiving very unfavorable treatment under Basel III, certain forms of lending. But that also has an impact on our customers, meaning that medium-term financing, bank financing for customers is likely to go up in pricing. That means that our customers will have to look very carefully at their financial supply chains, and make sure that their working capital solutions are as efficiently as possible. And that's where banks can help. And that's why, for instance, products like the shorter term products like commercial finance and factoring, like supply chain finance, trade receivables purchase programs, but also PCM, payments and cash management, are key in making sure that our clients get the products that manage their supply chains as efficiently as possible. Again, driven by the fact that the price of credit will go up.
So bringing it, back to better serving the corporate clients. I mean, are we seeing a trend to move towards centralizing or converging, cash and trade finance, supply chain, security services? Are we seeing a convergence of those services? Is that one of the trends that the industry is moving towards?
I definitely think the industry is moving towards that trend to serve this particular client segment, our corporate clients. I mentioned previously the importance of better managing your working capital and your short-term supply chain for our customers. So you see banks bringing together those products under a transaction service umbrella. Within ING, we have most of those products under a transaction service umbrella, but we have to make sure that other important products that are also managing for our customers their working capital and their supply chain, that we align better to them. And I'm referring specifically to, for instance, financial markets, with your basic financial markets products, but also the short-term end of our lending services, when you talk about revolving credit facilities and overdraft facilities. So very important to bring that closely together so that our customers have a full view of that. What's also important is to, and you see that more and more in the market, that certain product families are being brought together to offer the best product depending on the customer. An example, for instance, with ING is that we had a lot of products that relate to financing trade receivables and trade payables, which were scattered around the place and what we have brought together under common leadership. And here I'm referring to trade receivable purchase programs, supply chain finance, international factoring, these type of products based on the short-term assets of a company being brought together in one offering and solution offering for our customers.
So it's not so much bringing all these services under the same umbrella, it's also making sure, as you said in the beginning, keeping the operations streamlined and integrated and efficient as well.
That is very important. Very important, both for us, from an operational risk perspective, from a regulatory perspective, but also as a solution to our customers.
Excellent. Thank you very much.
You're welcome.